Get ready for the headlines because the market is shifting fast. We start with UPS signaling a major network reset. UPS is aggressively recalibrating its strategy, slashing its exposure to lower-margin Amazon volume by cutting daily volume by half by June, and planning to close additional parcel facilities in 2026. This isn't just a small tweak. It's a fundamental reset of how they manage their network mix, forcing a move toward selectivity and tighter cost control amid rising labor and routing complexity.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we look at the world of canine logistics. We catch up with John Miller as he dives deep into the specifics of indoor grooming logistics, giving us the insider view on how these specialized services are being managed and optimized for the pet industry. If you need to know the inside story on grooming supply chains, this segment is for you. Now, let's talk about the bigger picture in global trade. Global Trade magazine reveals that traditional supply chain design is breaking down under pressure from tariffs, regionalization, and sustainability demands. Supply chain network optimization is no longer optional. It is the critical leadership tool companies need to balance total landed cost against resilience, regulatory exposure, and environmental impact. And finally, we're closing with major real estate and logistics moves. Ares Real Estate has just acquired a significant portfolio of 5 logistics assets in Poland from Savills Investment Management, bringing key facilities in Warsaw and Poznan under its management via Mark Logistics. This acquisition highlights the intense focus on strategic logistics real estate, and don't miss out on the full analysis of what this means for the future of global distribution. Stay with us. Neudunkheit. UPS is executing a significant network recalibration, shifting its strategy from volume growth to yield, density, automation, and stringent network control in response to evolving market economics. Despite stabilizing parcel demand, UPS is actively restructuring its operations rather than returning to previous conditions. /N financial indicators underscore this pivot. In the first quarter of 2026, UPS reported U.S. domestic revenue of $14.1 billion, a 2.3% decrease year-over-year, while revenue per piece simultaneously increased by 6.5%. This signals a strategic move away from prioritizing raw volume toward emphasizing price, mix, and operating discipline. And a key component of this reset involves reducing exposure to lower-margin business, specifically Amazon volume. UPS has aggressively cut its average daily Amazon volume by 500,000 pieces in the first quarter and aims to halve this volume by June, reducing Amazon's share of UPS revenue from 10.6% in 2025 to 8.8% at the end of the quarter. This is framed as a tactical move to redefine the network mix. /N, the operational environment has become more challenging, characterized by elevated labor costs, increased routing complexity, and inconsistent delivery density across various markets, all while service expectations remain high. In response, UPS is tightening its network, achieving approximately $600 million in program cost savings in the first 3 months of 2026, and planning to close additional parcel facilities in 2026 as structural adjustments. And furthermore, the competitive landscape is shifting. Amazon is expanding its own logistics footprint through Amazon Supply Chain Services, directly competing with UPS and FedEx by offering services beyond its marketplace. This forces UPS to manage competitive exposure rather than just customer concentration. And the new focus is on moving the right packages that support network economics. UPS is enhancing capabilities in areas like RFID labeling, cold chain services, and specialized delivery solutions to ensure packages fit the network and support profitability. And this transformation signals a fundamental change in carrier-shipper relationships. The new paradigm dictates that carriers seek volume that strengthens the network, not just volume for its own sake. For supply chain leaders, the lesson is clear. Parcel strategy must evolve from a procurement exercise into a complex network design, data, and service strategy challenge. The market is settling into a disciplined model where network design and profitability drive decision-making. Canine Chronicle has featured an interview with John Miller discussing the logistics involved in indoor dog grooming. The content, titled Grooming Logistics, 411 for Everyone Canine Chronicle, provides insights into the practical aspects of indoor grooming for pet owners. Viewers can access the full discussion on the channel YouTube TV platform. For more information, visit the provided short URL on the Canine Chronicle website. Global trade is fundamentally challenging traditional supply chain designs. In an environment marked by tariffs, complex customs, regionalization trends, transportation volatility, and heightened sustainability expectations, the pursuit of the lowest cost option is proving insufficient. Companies are now urgently turning to supply chain network optimization as a critical leadership tool to evaluate the entire network holistically, moving beyond isolated cost centers. The traditional focus on simply locating the cheapest production or movement point is obsolete. Modern executives must now answer a more complex question: how to design a network that balances total landed cost, service levels, regulatory exposure, inventory risk, sustainability goals, and resilience to align with overarching business strategy. Network optimization reframes the supply chain as an interconnected system where decisions in one area, such as manufacturing efficiency or freight choice, have ripple effects across the entire network. It moves leaders away from siloed optimization, where procurement focuses only on unit cost or logistics only on freight efficiency, toward a shared decision framework that models the combined impact of all variables. Total landed cost must be understood comprehensively, encompassing not just purchase price and freight, but also production, warehousing, inventory, duties, taxes, service requirements, and operational risk. By modeling these variables together, leaders gain clarity on trade-offs that are often obscured when functions are analyzed separately. This capability is vital for planning multiple future scenarios, such as shifting demand, supplier constraints, or changing duty structures. Without a structured model, these complex evaluations become subjective. Network optimization provides the discipline to quantify trade-offs, identify constraints, and understand the consequences of network changes before committing significant capital. The value extends beyond mere cost reduction. Optimization is intrinsically linked to resilience, enabling companies to design networks that anticipate disruption rather than merely reacting to it. A resilient network balances efficiency with flexibility by strategically positioning inventory, identifying alternative sourcing options, and understanding where redundancy is necessary. Furthermore, sustainability is now a core design consideration, integrated alongside cost, speed, and resilience. Network optimization allows companies to test how changes in transportation modes, manufacturing locations, or distribution footprints can simultaneously reduce emissions while improving service or lowering costs. Successful organizations in this new era of global trade will be those that understand the full cost and consequence of their network decisions. They will leverage network optimization to transform complexity into structured analysis, enabling them to build international logistics networks that are efficient, compliant, sustainable, and agile enough to adapt to continuous change. Ares Management Corporation's real estate arm, Ares Real Estate, has finalized the acquisition of a significant Polish logistics portfolio from Savills Investment Management. The deal involves 284,000 square meters of logistics assets situated across key Polish locations including Warsaw, Poznan, Upper Silesia, and Szczecin. The portfolio is currently 94% leased. Following the acquisition, the assets will be managed by Ares, global logistics platform, Mark Logistics. Don van den Hoven, partner and head of European logistics at Ares, emphasized the strategic fit, noting that Poland is a sector where the firm has invested for over 2 decades, positioning the transaction at the nexus of their sector expertise and localized investment strategy. He added that the firm is leveraging Mark Logistics' capabilities to maximize value for investors. Avert Castelline, head of Industrial and Logistics Europe at Savills Investment Management, hailed the disposal as the successful realization of their business plan following the portfolio's acquisition in 2020. Castelline credited the focused asset management strategy and local team efforts for strengthening the portfolio, despite a challenging global environment, stating that Ares' involvement underscored the quality of the assets and the lasting appeal of the Polish logistics market.